interpretation of the financial statement. So let's use the question that I sent. That would be the corporate reporting question. The corporate reporting question. This is July or July. I guess for the ratio, you know what to do. For the ratio, you know what to do. Or you still want us to go through it. So for the ratio, so the ratio has been coming since, and there has not been any changes. But this time, since there was a change in the corporate reporting question, we are also trying to see whether this time they will change the pattern. So we don't want any surprises. When you look at the question that came in, but as we said, it's always going to be a report. So the report supposed to be the heading, or it may be memo. Then 2, where is it from? Then date and the subject. So always, even though they may change the person, but report will still be in present. Report will still be in present. Sorry. And so, I'm very like this. Christian, that's a cat. I have to be in the So that is question number, is it 4? Another one I'm saying, okay, for this one is question number 5. Okay, so as usual, that is how it's going to be the report. So where is it going to be in the present? Where is it coming from to be in the present? The date, the use that Monday's date. Or if the date is also given, it's also the subject is the requirement to be in the present. So you don't have any excuse than to write there. That is okay because I didn't know that. Then you bring the introduction. So with the introduction that we said, what are you supposed to bring? The report, the subject, you write the same subject in the introduction. Now this report is talking about blah 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 the requirements. Then the second sentence is how you are going to categorize the main work. Then the third sentence is what? The appendix will show the detailed calculation. You are done with your introduction. And introduction is 2 months. So you have to get that 2 months. Get this one, which is 3. You have 3. And this. And the main one, the exams give you the structure. So if it is profitability, you just write profitability. If it is about liquidity, you just write liquidity. If it is about gearing or let's say activity or efficiency, you just write efficiency and the ratios will be there, gearing or the capital expenditure will be there. If it is the same with the 1,000 nobody can. Then bring your conclusion. And with the conclusion you say that what is here you just summarize it. So if the profitability is well, you commend the company. If it is not doing well, we tell them that that side is not well, and they have to do well to make the company be profitable. The efficiency and all those, you just summarize the whole thing in 1 or 2 sentences and it is okay. Then the next one is, if it is year by year, then you tell the examiner that you need the sector figures. so that you're able to compare the performance of this company with the other company, or you need a similar company's figure to do the comparison. If it is with the sector averages, that means that you need different year period to compare whether the company is making progress or not. It depends. So if it is 2001, 2002, 2003, that means that we need other firms figure or the industrial averages to make meaningful comparison. If it is also with the other firm, that means that you want to measure the performance of this company in a different years so that you knowing the progress of the same company. That one you are done. And you can see that you are there for any other thing that you need. So three sentences is also there. You are done. If you have to sign, you write your portfolio. And the conclusion also has one. So about 5 of them, even if you are not going to write the body for this and that and the introduction, you have to get your 5. Then the body. But you have said that this is the area that you have to pass. And you have to get at least 15 here in the exams. If you are not getting 15, then you are about failing. Because here everybody passes here. Okay. So the ratios, as we have done it, will be there. But there are other analysis that you can also do. Normally, if it is vertical, or let's say horizontal. So what do you mean by vertical analysis? The vertical analysis will mean that the financial statement will be analyzed vertically. So what you are supposed to do is that if it is the income statement, then with the income statement, the yardstick is going to be on revenue. If it is the statement of financial position, then the yardstick is going to be on total assets. So we measure all the other elements based on revenue and all the other elements based on total assets. That means that you are doing vertical analysis. So if it is profitability that you are talking about, what and what are you supposed to do that? The revenue itself. Because it will be given in different years. So if it is 2001, 2002, 2003, 2019, that means that each year revenue will be there. That is 100%. It's always as such. The total asset will be 100% as such. You have your cost of sales already there. Then the gross profit will come in. The net profit is still there. So what you are going to do is to do these things. Measure the percentage of the cost of sales on the revenue. So that you know that the revenue trend in there, you comment on it. Then the gross profit trend, you comment on it. The net profit, you comment on it. That will be for the profit. That will be for the profit. So generally, the profit was centered around these ones. So the cost of sales is about 90% in 2020. It's about 80% in 2022. That is what we are doing. So they are able to manage the cost of sales well in 2020 done in 2000. So then you are going. And as you said, if it is gross profit, it is still about the cost of sales. It is still about the cost of sales. So the profit that they got profit, how much percentage on the revenue, the net profit to how much percentage on the revenue. So this one will be managing the operating cost. And this one still will be the cost of sales again. So we are talking about profitability of the business. So if we just talk about profitability, we can still use a vertical to talk about profitability. Then the statement of financial position. You have a lot of items also there. You can have the working capital or the liquidity. So we check the current assets and the current liability. rate percentage on the total asset. Would they be able to pay any short-term liabilities? They will give us the liquidity. Then, with the gearing, the equity portion, the long-term liabilities or the non-current liabilities, let me use that another one has been. So the non-current liabilities, 8% of the total asset to tell us the gearing. Then, the efficiency, we can also have some of the items here. So if it is the inventory, inventory will tell us the efficiency. Inventory ratio on the total asset, the receivable ratios on the total asset, the payable ratios on the total asset will still give us the efficiency. Because the efficiency will have the inventory turnover, the receivable collection period, the payable payment period, all will be in the current asset and the current liabilities. So you can still talk about that. Okay, what again? Then I guess you are almost done. You can also look at the assets, the individual assets, whether the non-current assets here, whether there has been much investment in the non-current asset. I don't know. No, I'm talking about efficiency. The investment in the non-current asset, whether they have been able to turn the investment in the non-current assets as such for the profitability. So it could be that the non-current asset, there is no much investment in it, and it will still go and feed into the profitability. It will feed into the profitability as such. So you can just use these ones, and you are getting the marks. Okay. If it is horizontal, the horizontal analysis, it means that it is going this way. That means that you have to get a basis. So if it is the 19 or 20 or 21, 22, you can have one of it as a basis of measurement. So if you are using 2019 as a basis of measurement, you base on all the figures in 2019 kind of. So if you are measuring revenue, the 2020 on the 2019, 2021 on the 2019, 2022 on the 2019. You get it? So that you know that whether there has been an increase in revenue, the progress in revenue, the cost of sales, has there been a commensurate management of cost. So if this one has been 10% more, 20% more, 35% more, it means that we are growing in revenue. We are growing in revenue. And its cost of sales. If the cost of sales has been, let's say, 10%, 5%, we are managing cost. And if it increases 50%, it means that it is not managed cost in the year 2020. How will you get it? So that means that you are doing the horizontal analysis. So you have to find a base. You have to find a base. So if you want to use 2022, fine, that is your base. That is your base. Anybody can use any base that the person wants. Do the analysis. No, the question will not be just do the vertical analysis or the horizontal analysis. So yours may be different from mine based on the base. Based on the base that you choose. But fine, the person says choose a specific base, then you have to choose that specific base. But I don't think that it will be that. The most important thing to understand what you are doing. If you understand what you are doing, that is what they want, not choose the same base. So that maybe somebody sitting beside you will not get to ask you what you are doing. But nobody is going to ask any question because no one has time. You don't have time to ask any question. So here you are choosing a base to do your analysis. That is all. And as we have said, if you want profitability, that means that you can choose the revenue. You can also choose the cost, maybe gross profit. And you can choose the net profit. It's not like you're doing all the items. You cannot do all the items one after the other. That will not give you the time to do that. So you have to choose the important ones like you think that we are going to talk about. If you want only revenue, gross profit, net profit, fine. If somebody wants to know the cost, fine. Then if it is the liquidity, you are still choosing the base to know the liquidity position, which will be in the statement of financial position. So still we are choosing the base. Has there been any increase in the inventory? Has there been any increase in the receivable, the cash, and those kind of things? Whether there will be cash there, comparing it with the current liabilities. Because with the liquidity, we are talking about the current asset and the current liability. So you can choose the basis for one current asset and another one for one current liability and know the trend which is lower. So that we know that you can pay, this can pay, and this cannot pay, and those kind of things. I don't think it's difficult. Yeah, so that is the analysis or the appendix that you are doing. The calculation is the appendix. Then you use the calculation to come and write your report. No. Any question? Yes, whichever one that you do, you're still going to get a certain percentage based on what you want to do. So if 2019 is, let's say, the revenue, so let's say 200, 2020, let's say 220, right? 220, 2021 is 100. So whichever one that you want to get, if you want to use the chain, 20 over 200, let me bring it here. 20 over 200, that means that you have subtracted a year to get a percentage increase. But if I also do it 220 over 200 times 100, you still get an increase time. That means that all of that will be over 200. All of that will be over 200. So this one, how much are you getting? 10%, right? 10%. And this one, how much are you getting? So it's the same thing. So it means that there has been an increase of 10%. So if you want to use a change of the absolute figures, you are still going. If it is below that, it means that it has reduced. It means that the 100 is there as an absolute percentage. Okay. So let's use the question and try to get it and see whether you're able to do one or two things out of that. Question number 5, corporate reporting. Now we are the whole media over there. That's also that. So the requirements. So it is going to come from financial advisor. I mean, it will be there in the question. And it's supposed to go to who? To whom? So he said he will want you to laugh. Yes, I'm sorry. Okay. You're supposed to go to some people as a financial advisor, reports on the financial health. Otherwise, ABC limit. So that one will also be there. ABC mutual fund, right? So it will be there. I've been done one here. Okay, then the date for the exams, you just put it. And the subject is that what are you supposed to do? Report on the financial health or otherwise of so financial health or otherwise of that can be the subject. The introduction is also in it. Then you just start the introduction. So you can use the first page to start. The second page can also be there. The third page for the report too. Then you start the calculation on the fourth page. Now I won't go through it. You don't want a situation where you start somewhere and you don't know that you don't have any space to write. Maybe an average of nah. Okay. So the introduction is also there. That this report on the financial health or otherwise of Togo Limited based on the vertical analysis of the financial statements. Then you can see full stop. The last sentence gives you the focus of the report, right? The report should focus on. So this report will focus on the profitability, the control cost, profitability and control cost analysis, asset structure, capital structure, and the working capital structure. Then the last one will be the details of the calculation is shown in the appendix attached. Okay, introduction. Yeah, the client is always serious. We are about doing it, and you don't want to do it. Okay. Then we come to the main question. So let's start from the top there. Do you want to calculate your this is internal. That means that fine, you can do some small calculation. If you think that you can calculate, then you don't need attachment. You don't need attachment. Like this one that it has been calculated. So what attachment are you doing? I hope you understand. The calculation has been done. So see, I just go through it.
Okay, so
Presented below.
presented below are the common side financial statements of Togo Limited over the last 5 years. So then the vertical common side statement for the year revenue as the base year.
Okay.
And then the cost of sales, gross profits, distribution and marketing costs, administration expenses, other operating income, other operating expenses, profit from operations, finance costs, profit before tax, and profit after tax. And then the vertical common side is statements of financial that's an very similar. The current assets, we have property, plant, equipment, intangible assets, capital work in progress, long-term content analysis, total and current assets, and two benefits, receivables, repayment and marketing, other receivables, short-term investments, cash and bank balances, and total current assets. So we have total assets as the base. And then we have the equity. Equities are the issued, subscribed equities and capital. The retained earnings, other reserves, the total equity, other than the total equity. And non-current equities are exponential liabilities, deferred tax, deferred revenue. And then the current activities are the current portion of deferred revenue, income tax. So then we have the total activities as the
Okay. So you see that it has already been calculated for you. So what you are supposed to do is after your headings and the introduction, then you pick the requirement, the first one that you are supposed to talk about profitability and cost control analysis. So what are you going to say about that? You have to know where you are supposed to pick the two details. So profitability. Which one are you going to use? If it were you, if you were the one doing it, which ratios are you going to use? Or which of the figures you are going to use as your profitability ratios? Então, cadê o mecanismo de policy So profitability and cost, what do you call it? Cost control analysis. Which one are you picking first? But the heading will be the two. And you want to talk about profitability first, fine. So what you want to say so that you all discuss and you go. But you can find if you want to do the introduction, that means that you are going to talk about how profitable the business has been over the past 5 years. Right? So you can bring the preamble as such. And how the company has been able to control costs. So we are using the same heading and starting with one line. Now, so you are going to talk about this section, talks about how profitable the company has been over the past 5 years and how they have been able to control the cost. Full stop. Then you pick any of the ratio to start. You don't pick any. Do you really want to start?
So maybe I would prefer to use the profit from operations.
Okay.
When we look at the trend from 2018, it was on an upward trend until 2021. And this one would be attributed to the expenses over the period. Because the expense that was incurred in the figure expense that was incurred in, I think, in 2022 was on the high side. The therefore reduced.
I can't go back and I don't think you guys have to see the thing.
Yes, so
because I've told you that you have to pass before you go. So you have to know what you are going to write while you are getting there. And you want to have a journey, yes, I'll bet it. You think, yeah. And it's like you are doing the report. So if you are doing the report, you think, what? What do you think? Somebody is saying report on the financial health for the person to take a decision, and you think what? Please, write what you are supposed to write. So 2018 to 2022, 5 years. So you don't say you take, you say that these are the costs that they have cost. Because the cost is in there for you to use a fact. It's not like it's an imagination.
So should it be a probability or
No. It's I mean, the detailed ratio says it. So those things that we were saying when we were learning it as maybe you can look at the use of the technology. They use. You don't say that probably they use. What do you mean by probably? So the changes you think as a result. And that one is a little bit credible than you think. Or even if you are using probably, it's also not right. It is in the other Canadian part. One guy better answer, and have you be able to when you get to the exam, you don't even know what to do. So say what you have to say. And there's also maybe about the cat. So if you are using profitability like the profit from operation, that is okay. If you are using gross profit, that is okay. And there is also cost management or the analysis there. So the cost of sales is also okay. There's net profit. We are still talking about profitability and cost. And so please, you first of all pick where you are going to say something about. You are choosing more than one. You are thinking about profitability and cost management or cost analysis, cost control analysis. It's there. You'll be choosing the initial one. You'll be choosing one side. So choose more than one. About 3 on each side is okay. But as for profitability, there has been a course that you choose 3. In the course of the time, I'm going to choose profitability 2, now the course by the it's okay. And I guess the profitability section will pick more marks than the other section. Because the one has a name and a doors. So, and you said that it appears that the net profit from operation,
Yes,
has been increasing.
over the period up to 2021.
That is from 2018 to 2021. Okay.
But not something or not let's say
It's an increase here. Increase again.
the last
So we dropped from 2021 to 2022. That was, and so sometimes you mention the figures there so that at least the examiner knows that you have looked at it.
yes.
Mm-hmm.
So it got from 13.82 to 10.38. As a result of excessive expenditure in selling and distribution marketing costs.
Okay. So we can go further to say that the management were not able to manage the operating costs. That has caused the drop in the operating profit. Or the management is supposed to take steps to manage the marketing and the distribution costs so that they can improve upon the operating profit margin. And you have to give us the reason or tell us a recommendation or something like that. Okay. There you go. So what is the energy of baby become? You see that?
gross profit?
Okay.
From 2019 so the data was had an increase in gross profit.
Okay.
Then
Mm-hmm.
then in 2022, they had a reduction in gross profit.
Okay.
This is due to the fact that from 2019 to 2021, the company was able to reduce its cost of sales.
I'm not sure reduce it. Why does it reduce it? Because why reduce it? It has been reducing. Now, but we are talking about gross profit, and you are bringing in cost of sales. It may be that it's only the revenue that has been increasing, not the cost of sales. Now we start. No, but when you see the percentage, you see that maybe the what do you call it? The cost of sales has been increasing consistently. Mhm. But you are saying that it has dropped. That's why I'm saying this. So the gross profit has been increasing fine, and you are saying that it's as a result of a decrease in the cost of sales. But if I go and look at the cost of sales and there is no reduction, that means that you are in trouble. You don't see well. You understand? Fine, you can say only the gross profit. Fine, we have been able to manage their cost of sales. That is okay. But if you are saying that the cost of sales has been decreasing and I look at it and it's increasing, it's going to be something. You understand? So that's why I'm saying that look at the cost of sales, whether it has been decreasing or not. I haven't checked, but I'm just saying,
It was actually increasing.
was it increasing?
It was actually increasing. From
The cost of sales.
to 2020.
Check drop home the increases room. Now also say of course was I say once you are saying you have to back it with the figures there. And one will say increase now to say decrease here. Say one or two of them. So you can talk about gross profit improving, all right. They are able to manage their cost of sales and maybe increase in revenue. Even though there has been increase in revenue and increase in the cost of sales, it hasn't been the same proportion. That's why the cost of the gross profit has been increasing. You understand? Because if this one increased by 5 and the other increased by 5, it means that the gross profit figure will not increase. You get it? So revenue increased by 5, cost of sales increased by 5, it will cancel it. But if there has been increase in revenue and a commensurate increase in cost of sales is not up to that, if this one is 10 and this one is 4, it means that that difference will be gross profit. You get it? So even though there has been increase in cost of sales, it has not increased as an increase in the revenue. That has made the gross profit to increase.
If you look at the cost of sales, in 2018, it was 92.7%, which reduced to 87.6% in 2019.
Okay, so you can even
decrease in 2020, but there was a sudden increase from 2021 to 2020.
So you also talk about the cost control. So you can use the cost of sales to talk about cost control. Because the heading is profitability and cost control. If you have a profitability, you don't have cost to be So you have to talk about cost too. So if it is a gross profit, the cost of sales, we can also talk about it. That from 2018, it has increased by that, and it has increased by that, by there was a sharp decrease and another increase. So that everybody knows that you saw it. And what do you think will be the cost? The reason is supposed to be given. One more reason there. Cost of sales, production cost or manufacturing cost, it means that the cost of manufacturing has been on the high. So management is supposed to do something to ensure that the cost of production is reduced. Because cost of sales in manufacturing and material and other cost. And sometimes when you're doing the ratio, let's assume that the company is a manufacturing company and you need to do that. Because we are talking about production cost, and if it is still service, there is production cost. Just that manufacturing will give us more details in there than in a service industry. Okay, and what again? Do you feel that? Then the profit before tax. Okay. Yeah, no, sir. I'm paying. Alright. Mm. Juga kan saya just. Ah, okay. Okay. Ah. From where to where, from what to what. Okay. So we said that when you are also talking about the net profit or the operating profit, we can also buttress it with the revenue mobilization strategy as well. So that if the revenue goes up, it means that it will cascade down to the profit. So management is supposed to do well to ensure the marketing of the product so that more revenue will be generated from the sales. Okay, the interest one is yeah, okay. Then we come to the second portion. The second portion is what? Asset structure. Assets. That's another. So the asset structure, we are talking about assets. So we are talking about non-current assets and the current asset. So we go to the asset structure. Let's look at it and see the percentages of the asset structure in there. Until someone will say to come as a so it means that there has been much investment or increase in the current asset. You see that? The inventory, the receivables, and the short-term investment there has been seeing increase year on year kind of. Current assets section. Oh. Madam, current assets. And as I said, the order, what about the non-current assets? The non-current assets, be it the PP and the intangible and the tangible there. Okay. Okay. So there has not been much investment in the current asset. Which the space was longer, which so it means that they were using old machines, which has increased the cost of production because the depreciation will be higher now. Cost of repairs will be higher now. The richest place you are, I don't have to have or not. Of course, it will be that now. Because if there is that cost, or if you are using old machines, it means that you get much of the production cost now. There may be breakages idle time, they will be there waiting, and you pay more cost. That's why the cost of sales has been increasing. And which made the reason people are coming. Okay. Let me do. The honor son. So since the financial assets or the non-current assets, we also have been increasing, right? It's the PP which has been reducing, but the financial assets have been increasing, right? So we don't know whether there has been a shift in the company's objective. The production, but that's a, they are interested in investment more than even the main production. That's why they are not investing in the PPE rather than the financial assets. To be to the one time, say that we need a cat. No, it's an answer. I hope it's okay. Okay. Then you can also go to the next one. So we just look at the asset structure, the investment in the machine, PP, and talk about it. Then we look at other assets, apart from PP, other assets that are there as non-current. And you can comment whether there has been a shift in the business objective. You come down there, current asset has been more improving kind of inventory or even the cash or short-term investment. That means that they want to just get their money and do the investment as they are doing. Okay. But if they want to improve on the management of the cost or the profitability, they have to invest more in the new machines or new equipment. Okay. Then we go to the capital structure. For the capital structure, what are we supposed to say? So the capital structure will be whether there are more equity than the long-term liabilities. If there has a long-term liability for pension, deferred tax, and those kind of items were there. Have you seen it? So let's talk about it. So the capital structure, if you don't have the long term, you can also look at all the total liability. You can go to the current liability there and check. Maybe as much as they are having more inventory, it is financed through trade payables, right? Or if they have more cash, it is through overdraft or other short-term loans. To look at that side too and check.
Yeah, because we have high levels of trade and other payments. So you see that from 2018 it was even 8, but back to 2022 it was also increasing. The last time that we had a low amount of liabilities in that respect was in 2019. Okay. But apart from that, we normally hold high liabilities in other payables. So we finance the activities mostly through grants. Okay. That one is also going to, because of the short-term nature of that kind of facility, they will be under pressure to pay, and going to affect them. But if it was spread over a long period, there would have been some kind of difference in information in the working.
Okay. So the capital structure, they have more equity without the long-term liability. That one is there. You can see equity more. Notwithstanding, the current liability has been increasing, especially in the trade payable, as you have seen. And that means that we rely on more of the short-term liabilities. It is okay in a way because they are not going to pay interest. They are not going to pay interest. So their capital structure is good because they are not going to pay interest on the short-term liability as in the trade and other receivables. It's interest free. However, it is also risky, as he is saying, that is for short term. So anytime that they are coming for their money, you have to give it to them. Notwithstanding, I guess you have more of the current asset to cater for that. But anytime that the trade and other receivable, if it is secured on a certain asset, that is also another cause to worry. Because if it is secured on a certain asset and you are not paying, the person can come and pick the asset and the business will not be a going concern again. So we talk about only these ones. So the cost structure, whether there is always, what do you call it, more equity, liability. And since this one, the liability is more of the current liabilities, we talk about it. We give the advantages as such as the interest free, and we also talk about the risk involved in there. Okay. What about the interest cover? It is also part of the capital structure. In Nigeria, the interest cover is part of the capital structure. You know in the ratios. So let's talk about that one. What about the interest cover? So go and find the finance cost and check it. Would they be able to pay for the interest? 0.2, 0.029, and this is the income statement. So it means that the company is also comfortable paying the interest on the liabilities that bear interest. Looking at the trend from 2018 to 2022, in all of the years, the business will be able to cover for the payment of the interest when we fall due. Comfortable. Okay. Then the last portion, capital structure. Working capital structure. So, working capital structure. So let's look at that. Working capital structure too. Waiting. Working capital, we are talking about the current assets and the current liabilities. So that's where your focus is supposed to be in. So you can pick them one after the other or jump them together. So when you look at the current assets, inventory has it been declined? So inventory has been declined. And when you look at the final one, that is why we are saying that it seems that they are shifting their focus from the manufacturing to the investment portfolios. Because whilst you are a manufacturing company, you are supposed to get the inventory more to sell. Okay. Then the short-term investment, the band of the other cash and cash balances. Has it been increasing? The cash and the short-term investment has been increasing.
They are keeping full money cash.
So they are keeping more of the cash.
They are also interested in short-term investments.
So they want to also keep it in short term, and that will also help them to pay the current liabilities as in the trade payouts when they fall short, when they fall due to be paid. Because if they don't have the short-term investment and they are going to have a long-term investment, it will be difficult for them to pay back the payouts, the trade payouts. Mhm. So the firm generally will be able to meet its obligation of the short-term liquidity. Right? So when you talk about that, it's okay. Then you are done. Then you give us the conclusion. To look at overall as such. So the profitability has been a little bit ups and down, kind of. Then the capital, the asset structure, more of them is in the current assets than the non-current assets. So if management still want to continue with the production, they have to invest more in the non-current assets. Then the capital structure and the working capital, to also talk about the liabilities, the current liabilities are more, which they have enough current assets to pay the current liability when they fall due. That means that you have summarized the whole thing. Then we still have to continue and talk about having the other industrial averages to give more credit, because this one is 5 years for one company. So what about the other figures from the industry? You need that to compare whether the business is making more profitable as it is, or it is only itself that is making profit over the years, or managing the capital or whatever. Good. Then you are done. So if you sign for, you sign. So please, even if it's not the ratios and in this one, you still have to say something about the percentages and why this happened. It is very important. Okay, so we are done that one. Let's have an overview of all the standards and find a final account question and do it. And I guess we are done. Hey. Framework and what kind of But for the ethics, we have told you that the 5 ethical principles are always those and that counts. So whether it is integrity, you are supposed to be straightforward and honest. So anytime that person is not straightforward and honest, you have to be able to identify it. Then objectivity, correct things in there. So this is for ethics. So if you are supposed to identify the ethical issues in there, then you can write integrity. Then within the case, who is not showing that integrity? In the integrity, as we have said, you have to be honest and straightforward. Honest and straightforward. So anybody who is in there who is not honest, who is not straightforward, lacks integrity. So we mentioned the person's name. Mr. Person supposed to be straightforward and honest in dealing with the situation. We want you to answer the question with the case. We know that honest integrity is straightforward and honest, but we want you to go and read the case. Who is not showing that honesty or straightforwardness? Then you mention the person's name and you use it to explain. That is what that is about. So if there are 5 and they are not showing that, mention all of them their name in one sentence as such. So if we have 5 sentences. So if all of them are not showing honesty and straightforwardness, mention their name. Say the other person, the same sentence, just that the name will change. If you also want, you can change the honesty and the straightforwardness, whichever. Okay, so objectivity will also mean that you don't have to allow bias. Not allow bias. You are also not supposed to allow undue influence and you yourself conflict of interest. So the three of them. Not to be biased, not allow undue influence, and conflict of interest. So if you are discriminating, it means that your objectivity is impaired. We are all in the exams, not discriminate. Okay. Then if within the case somebody is influencing the other person, objectivity. Or if in the case you are allowing your personal interest to override your judgment, it also means that you lack objectivity. So the person that you are talking about, personal interest. Maybe you are my friend, that is personal interest. Or I have to get certain thing from you, that is personal interest. And I'm favoring you in that way, personal interest. If you are also influencing me, it's also influence. If I'm being biased because I want something also from you, it's also objectivity. I hope it's okay. So that is for objectivity. Then the professional competence and due care. So that one, you are saying that you are going to learn until you die. So far as you have chosen accounting, you don't rest. Well, you say, oh, yes, so what is it? Who feel it how bad? As long as the job you are going to die. You have to pass. So even if you go, you still want to come and do it. Okay. So you have to obtain and maintain all the professional competences that you have acquired, and you're supposed to provide it at the current development level for your employer. Then you are also supposed to act diligently. But it's the same, always the same thing. You have to act professionally. You have to act professionally. So here it means that you have to also know all the standards that you are supposed to know. Work and make sure that your client or your employer gets the best out of you. And that is the professional competence and due care. So in the case, if somebody doesn't know what to do about something, the person lacks professional competence and due care. So maybe you have to do this and you don't know what to do. You are fresh there, you are new there, I don't know this, that, you lack professional competence and due care. So if it's in the exams and you cannot do it, you lack professional competence and due care. If you go and film, you lack professional competence and due care. So you have to ensure that. Then we have the confidentiality. So, as you are supposed to be able to keep secrets, no, everything that you shouldn't be accountant. If you want to be accountant, you have to keep secret. So that is the confidentiality. Keep quiet. So even if in our office and other people are coming there, even though we are working with them, they are not in our office. So we keep quiet. When we do, then we continue. We continue to discuss what we are discussing because you don't have to hear what we are talking about. So for accountants, you have to ensure that the information that you get as a result of your work, you will not give it to third party. And you are also not using that information for your self-interest. During the self-interest opportunity and bank, you do a panel. We are accountant to have another. You don't have to use the information and withdraw all your money and go. That is confidentiality. You don't have to also go and tell somebody that, hey, That means that you have breached confidentiality. You have breached confidentiality. But Ghana.
Professional communication. I'm working for someone. I'm
Okay.
as a professional, I've seen that company is winding up.
Okay.
Can continue.
Mm-hmm.
Now, confidentiality. Do I tell my employer that when you are investing, it's not profitable? So because
Now, like this one is, you are not working in that company which is collapsing. You are working for your employer. He has entrusted everything in you to invest in various portfolios. And you have seen that a certain company that you are going to invest in is losing. That one is at your professional advice to advise the person. But if you are working there and you dig the information, that is what we are talking about. But here, you are competent, you have seen the trend that it is going, this business is collapsing. Right? Let's withdraw our businesses from them and this kind of thing. That is professional competence and detail. But if you are working there, it's what you are talking about. If you are a footballer, you tell your family that you bet. First red card, look what you told me. And also all the local song. Then I got cheaper. I was using now. You should know China and bam. We are man red card. Worrying. Music about. So that is what you are talking about. The footballer has breached confidentiality. So the footballers are not allowed to stake the bets, and they don't also allow their family, close family members to do it. If they catch any of your family members doing that, and it's as a result of your issue, it means that you'll be found culpable for the law as such. So if it is first goal, that's a first goal now be shashe. But can't you also first goal? So that is confidentiality. You don't have to use the information that you have acquired, and you also don't have to tell others without the consent of the one who has the information. Or if it is also in the public interest. If it is in the public interest. Or if it is also required by law for you to disclose it. Or for your professional duty. So those public interests in the hearing. So if possible, you consult a counsel, a lawyer, to know that is it for public interest, so that if I go and say it, nobody can take me. So here, insider dealings and negligence and those kind of things. Maybe you are working in MTN, the share price is so and so, and you think that you are going to do one or two things for the share price to go up. So you tell your family member to go and buy more shares, so that when the share price goes up, you will sell it. That is insider dealing. And if you are found, you will be punished. Okay.
Yeah, my question has to do with the confidentiality. In the public sector, we say that we have RTI. And for that matter, everybody has
the right to information.
Yes. So in that case, and in the public sector, so when you are, most of us accountants and all that, you swear and oath of secrecy and something. But so with the introduction of this, someone like this within council request for this, you have to give it to them for
So that is why we are saying that the information that you have acquired, you shouldn't give it to somebody unless there is a consent. So it's everybody aware that you are giving such information, or like you have been given the directive to give such information. If that is the case, fine. If the law, as we are saying, right information will gives you the directive to give that information, fine. That means that you can give. But there are some information that may also be in public interest that you only know. That one you have to consult a lawyer whether to give or not. Because the public interest, nobody knows public interest. Or if a court summons you to come and give that witness, I mean, we don't have any excuse than to give. Maybe as a result of your work, then you also need to give that evidence or give that information so that you'll be exonerated. That means that you have to give because you are not part of it and they want you to be part of it and you have been found as such. You have to give the information so that you exonerate yourself. That one you have to also give. So there are areas that you will give the information, but not all the time. So as an accountant like that, there is going to be a meeting, and the meeting is your friend that they are going to discuss, and they want to terminate the appointment, and you leave the meeting, and your friend meets you. I said, what happened? What are you going to say? Are you going to say, hey, Master, go and pack your tents or write a resignation letter before we sack you? No. Confidentiality. You are supposed not to give the information to that your friend as at that time. If you are going to give him a letter, wait for the letter to come. Any other you complaining. Complaining people, I know to them. Or committee, now that one can be. So that is what we are talking about. Or at times, there's certain allowance will be fat than somebody's salary. Do you disclose it? Scan the whole demonstration, scan the whole more contrasting or just certain allowance. It will be salary. And you cannot disclose it. As accountant, you cannot disclose it. You will not even be part of the strike. Because your salary will go to my work. So that is confidentiality. And the last one will be professional behavior. Professional behavior. So with the professional behavior, we are saying that you have to conduct yourself well. Your behavior is supposed to bring credit to the profession. So the way you walk, the way you talk, the way you do everything. Pardon? Yes, you have to ensure that you work well. You don't have to. Because when we were going for the orientation, they were even telling us how you eat. And all those kind of things. You have to eat well. Now that you become an accountant, you don't have, it's not all the places that you can eat. And it's not all the places that you can eat. What you can with it? Now accountant, what should I say? I see after the father, you go to our me and say, how? Your behavior. And you see you fighting. Fighting for what? As an accountant, you shouldn't be doing that. No, the office. Accountant. No, sometimes when you do that, you are someone there, then you can withdraw your license. These ethics, you swear the oath on these ethics. So you want to ensure that your behavior is professional. You ensure confidentiality. You ensure this, you ensure that, you ensure that. That is the oath that you take as a member. And so if you breach any of them, that means that your membership can be suspended or you can terminate your membership. So you behave well. You have to behave well. So that is a professional behavior. And with that behavior, you are saying that you have to abide by laws and regulations. Abide by laws and regulations. So the difference between this one and that is that here you have to update yourself actually with the standards. With the standards. and produce results as such. But here we are talking about laws and regulation. So whether it's the laws and regulation governing the profession or the entity that you are working in, that means that you are behaving well. That means that you are behaving well. So in the question, both will be coming as such, and you must ensure that if it is about the work that you are doing, it will be here. If it is about not abiding by the laws and the regulation, it will be under the professional behavior. So it will be that you think that it's supposed to be here. No, it may be here. So you must ensure that you put it right. You must behave well and abide by all laws and regulations and not behave in any way that will discredit the profession. That will discredit the profession. So that is for that. But every as a police worker, we have a report to the action. It is a department that model is being we have a report and I see you soon there. And we will be angry. But unless you report. And now I said we are in the course of it here and here. It's your accountant we don't misbehave. If you are in India, I have evidence. You will treat the person as such. So please, for the ethics, it's supposed to be in your head as such. That we were saying that what are the recommendations that you will give? The recommendation will come from the issues. The recommendation will come from the issues. But there are one or two recommendations that is general. Whichever one that is coming, write that and you pass. You just want to pass. It's not like you want to write a lot of things. So the first one is to inform. If those who are here are management misbehaving, that means that you are going to inform the board. You have to inform the board. If some of them are board members and you want to tell the chairman, fine. Or you can say the audit committee. The audit committee. Since we normally relate with the financial statement kind of, then you have to inform the audit committee. Then the second one, which is also general, means that you have to seek advice. Seek external, professional advice from the ICH, from the institute. Seek advice from the institute. Or if you also want to take advice from the lawyer, you can also seek that advice from the lawyer. Okay. We need it to be. Then the last one, you resign. Resign, go free. If you think that the issue is too serious, the issue is too serious, resign. Resign from the work. If you move, resign. If you think that the issue is too serious, but I don't think you will resign here and come and continue with some of the issues. So let it be last. Let the resignation be last. Okay, so the other ones also depends on the issue. You can have training. You can have training. Training or education. That one is also important. It may also cut across. The competence or even the integrity, they are not sure. I mean, give them the training. Let them know what is in for them. What the company requires them to do. To give them the training. Or there can also be some monitoring and disciplinary actions. taken against those who are not conforming to the rules. You're supposed to be monitoring and disciplinary action taken against those who don't conform to the rules. Who is the last one, we hear that we need to have a flash. We now put our because some people. But at times too, there may be some meetings in there to discuss the issue. Okay. Then there is also one. Then documentation is also very important. So even after you have resigned, you can document. Or if before the resignation, you can document. Documentation. Or document the processes. Document the processes involved in resolving the issue. Just I don't know, so you show the documents to them. That this is the processes that have passed through in resolving the issue, but it has not been resolved. But if you just say it by your mouth, that means that they will not agree with you. So all the processes that you have passed through in resolving the issue, we had a meeting here, we said this, and they did not do this, and document them. So that is also a general issue that you have to write. So these are the recommendations to cater for all ethical issues. Which one church? Then can't your black church. One person. So if the person asks you, what are the actions that you are going to take in order to resolve the issue? What are the recommendations you are going to do to resolve the issue? Just like this one. But as I told you, you still have to use the case. So if it is inform the board of the company which is in there, you can also seek advice as for that company. You have to give training and education to the workers or whoever employees in the company. That one is also there. Monitoring and disciplinary action, documentation to resolve the issue, and you resign and go home. Pack all your things. That's the idea of what you have to do. They are in so they are coming. So the is here. Okay. So there's one question. I don't know whether let's discuss it. Let's discuss it. Is it more? Under the ethics. Or which one did you do as we guess? Question 5 on the. Is it November 1? Okay, you can also do that. The usual corporate here. Is it corporate question? What about the financial report? Okay. And the okay, let's look at that one and see how we are going to answer it. But the past question you background. At least you know so for them one there's nothing new under the sun, actually. It's the same people who are living here who are coming back. Okay. 5Z, right?
Yes.
So that's
qualified ICE. Yes.
design a system
Yeah, those papers are
Yeah, now kind.
the wrong one.
We can. I say you should remember the last question, but fine, whichever one. You should be in. And I'm over. I said, I
The
mean,
remember is
and your question number seven. Last question, your question number.
I think question 5.
Question 5A. Okay, so the requirement is.
You are explaining how you potentially act in order not to reach each of the 5 fundamental principles like fast food offenses. I recommend 5 possible actions that you should take as a member of the Institute of ICH in dealing with the situation.
Okay, so let's read it and discuss how you would have put it.
You are the finance manager of OK Limited, a manufacturing company in Ghana which is beginning to feel the impact of COVID-19 and the Russian war. As part of your duties, you will prepare a quarterly management account statement as the finance director for respondents. A few months ago, you noted that the company was not in the position to honor the obligations of the company's long-term bank, and you made Evans aware of this. We thank you for your vigilance and your raising the issue, but told you not to know. The first quarter of 2022 ended in the first March. Except for the quarterly management account was sent to the bank. You noted from the profit on file that the inventory figure of the financial position had increased by 1.55 million cedis.
So please, not cutting it short. You know the 5 fundamental principles that we are talking about.
Yes.
So as you are reading, you have to be putting it in there because it is a paper base.
Yeah.
So the paper will be in front of you. Now, since you are the requirement, that's why I always tell you to read the requirement first. So as you are going out, you know what you are seeking for. So as you are reading, you can be writing the fundamental principle in the question and write it near it, so that by the time that you finish reading it, you get to know that this is what you are supposed to be talking about. Yes, I can be kind of 4 times you. That's the whole thing. I won't move away.
So once you start,
15 minutes. You can write in the question paper, but you cannot write in the answer book. So that's why I'm saying that you use, if there is ratio, use about 10 minutes to calculate all the ratios that you need to calculate. Then with this ethics, use your 5 minutes to write the points that you need to write. Because if it is an action, if you are doing one action, you are better. Action, you are better. Still in a 5. Yeah, 5 in the Google, yeah. If integrity and whatever, you have to also write it somewhere that you know that it's integrity and those things that we are going to talk about. If you can now do a free spelling, get it before the season starts. So that those statistics will kind of about 10 minutes we will finish 1%. The other 20 or 25 minutes we will finish with the ratio. Like 40 minutes, they also use I holding now. What kind of yeah,
once you start Evans and have a good working relationship with him, you found the inventory adjustment surprising. As you have made all the usual checks to ensure that the type of evaluation procedures were properly adhered to. At the end of the second quarter, similar inventory adjustment was made. The adjustment on this occasion had risen by 2 million Ghana cedis. This time, you asked Ivan why the inventory adjustment was made. He accepted that at the quarter end, the company held inventory at external premises, which was not included in the inventory funds. You found this strange, as Ivan had never mentioned this to you. However, you decided not to pursue this matter any further. At the end of the third quarter, you noted that the set of accounts sent to the bank again has been ordered to include a higher inventory figure. This time, an additional 3 million has been added to the inventory value provided. This ensures that the company meets its obligation to the bank. You ask the bank to properly explain the inventory adjustments which have been made in recent months, and it tells you mind your own business and go on with your job. It also informs you that if you ever question the judgment again, you won't have a job to do. It means you're back and go. So that is the situation. So you are about to explain how you potentially act in order not to breach any of the 5 fundamental principles of the code.
So what are you going to do not to breach any of them? So you can break the first one. So integrity, what are you supposed to do not to breach? It's you. But you can start with any of them. If it is objectivity or professional competence or whatever. But the question was specific 5 fundamental principles.
Yes.
So you have to talk about all the 5.
Yes.
So which one that you start first doesn't matter. We are making one to 2 to the other one. And now so if it is the objectivity that you want to see first, fine. If it is the confidentiality or professional behavior, the change. Yeah. Which of them?
Integrity has to be.
You can. You go straight. But we are saying that the explanation comes within.
Straightforward.
There's integrity now.
That's by disclosing all the aspect.
Also, specific which of the areas? Fine, it has to be straightforward and honest in what?
Presenting the financial statement.
In the Nipa Mienu, financial manager and financial director.
The financial manager has been honest and straightforward. Imagine the actual figures to the financial director. But the financial director in this case is not able to understand by adjusting the figures in the financial statement to see own.
Okay, so what specifically are we saying? So you are saying that the financial manager is supposed to be straightforward with the financial director and tell him that the figures cannot be adjusted without any evidence. You see how it's supposed to be. The figures, the stock figures, if it's the stock, they cannot be adjusted without any evidence. So I say,
He said somewhere kept somewhere.
So I have not seen it.
Yes.
And you are saying that I'm preparing the document. So you have to be straightforward to him. Tell him that you have not seen the stock that has been kept anywhere. So you have to be honest. That's what. Then you have to go and verify before you can add. I hope it's okay. So that is the straightforwardness that you have to talk about. We can also see that the financial director has not been honest and straightforward with the financial manager because he has not seen the boost and you want him to act. You see how it's supposed to be. And he was also yeah. The straightforward idea is straightforward. So you have to give the reasons and attach to that. And I said financial, there was another document that they're supposed to be straightforward. Figures back, it wasn't there. The second part of it
I think it was the same inventory. Like every now and then,
Every quarter,
you give a different But that is different from what the finance manager has.
Okay. So you can go to objectivity. What are you going to say about objectivity?
So this
So what put it in a sentence? It's very personal competence. Very objectivity. The objectivity. This is competence. What you are having, like as a popular, what has a good role. To be able to change competence, objectivity better. Okay, objectivity. Okay. Can you So that is also because he was intimidated. So the finance manager should not be influenced or act under undue influence of the financial director as he is intimidating him. And then no matter to the woman out through. Okay. We shouldn't also allow any bias to and go and change the figures. Or even self-interest or conflict of interest. That is the personal interest to go and change the figures because you are going to be sacked. And if you are intimidated, that means that you are acting on your own, you want to protect your job. And if you are protecting your job, it's also self-interest, which is self-interest. It's still using all the context. Yeah, there's a conflict of interest. Because the person has threatened you that you'll be stuck. So if you don't, that means that you are allowing conflict of interest. You want to protect yourself. And do it one can the intimidation, which is the influence, and the conflict of interest, which you are protecting yourself. Okay. Then, which one again? I can keep you. And there was also within 5 minutes. Okay. Professional competence and due care. Also, showing in some wise. Okay. He was diligent to do it.
The financial director is not acting professionally.
Okay.
It's not taking due care because he is inflating even figures to be able to ensure that the company meets its obligations to the bank.
Okay.
So that's inflating the figures to mislead the bank that they will be able to meet their obligations. In this case, it's not a professional or he's not acting in line with the standards.
Okay.
that one also boils down to service.
The professional competence and due care, I'm going to take it to I'm going to take it to the professional competence and due care. Apart from that, you can also, because with the professional competence, you have to learn, and do things that are right. So, as much as possible, that the financial director is saying that there are some goods somewhere, the financial manager is supposed to take steps to know where the goods are and verify. So that is also in the process of learning. You want to verify where the goods are, and you are also supposed to count it, whether there is any error.
In the statement, he has questioned the director
That
No, you didn't take any further action.
So, but you said mind your own business and get on with your work. He also informs you that if you ever question his judgment again, you
You
will
look at
have
the paragraph before the end.
notwithstanding,
He said you decided not to pursue this matter any further. So then the finance manager should have go on to.
yes, you are learning. So it's professional competence and due care. And you have to take steps, even with the due care, you have to be diligent. You have to act diligently. And yes, I will never all right, but we have a relationship around taxes. Find a way to get to know whether actually there are loose material anywhere. I mean, if there is correction that you have to make, you do with accounting. So that is also part of it. Even though the director, the financial director, is supposed to know better, as you are saying. You are supposed to know that the goods that supposed or the inventory is supposed to be stated as fair value kind of. It's supposed to be presented fair in the management meet report or so. We still have to take steps. So the first thing is the financial director is supposed to ensure that the presentation in the management report is fairly presented. If that is the case, it means that professional competence is also available. Then the financial manager is supposed to also take steps to know where the goods are and if there is any correction being made. But it's a matter of it's reasonable. So giving the answers. Yeah, 5, but we are 1. Then we are okay. The next after I go to the hour is massa. We also 9-1. It was 1 point for each. The next is which one? Confidentiality. So you don't have to disclose the information.
this fight this challenge. Financial supposed to confidential. Not disclosing this amendment to the bank of actual.
The third part, actually, which is the bank, because the information is for the bank. So that means that you will not breach confidentiality. Or if you think that it is necessary, then you seek professional advice. You seek professional advice or legal advice. Because we say that there, you do not have to breach confidentiality. But if it is in public interest, and so that's, you are not going there as a public interest or not. But you still go further to say that you seek professional advice about the whole issue so that you don't breach confidentiality. Okay, then the last one, the behavior.
Professional behavior, the finance director is supposed to abide by all the rules and regulations, standards, laws, all of that. But based on what is doing over there, it's failing to abide by those regulations. So, for the finance manager, according to the figures that's available or information available to me, it's been very much showing professional behavior, but it is otherwise in the case of the
So here, I don't know who you here. I have to abide by laws and regulations as we have said. So what are you going to do? Maybe you have to take all the necessary steps, as he said that they have stopped pursuing the issue. You have to follow all the laws and regulations to pursue the issue, to get to the bottom of the issue, not to stop. Not to stop, but to make sure that the right thing is done in the organization. So if you are following all the laws and regulations to ensure that the stocks are adjusted as per the laws and regulations in the organization, that means that you are acting professionally. You are acting professionally. If you won't resign, I won't. You are following the normal procedure to know that you get to the bottom of the whole issue. Okay. Yes. Yes. There's a goofy and he is a superior than you kind. Okay, so please, it's not that too much difficult. That's why we are saying here this one, at least 8 months, 7 days, you have to get it. But framework and also to go and kind of come. There's a never what is an asset. You have to write the definition of that asset according to the framework, not your own asset that you know. So you want to paraphrase or you want to use your own version? But if you read it, you know how it is. But since you have not read it, that's why you want to paraphrase. Use your own asset definition, the property or resources, and blah blah blah, the family project. Yeah. So the financial director did not also ask professor, but since the question is what are you going to do, not to preach. That's why you don't want to go to the other side. Because he has already preached professionalism. So you don't want to go there. But the other one, who is a victim now, what are you going to do in order not to preach? So I can open the back. I have preached the professional. Okay. Then the B part is saying what?
Recommend 5% action that you should take as a member of ICE in legal investigation.
So we do not do that.
So inform the
or even if there is any senior ahead of the finance director. Can handle the issue. So you write all of that, management committee, board, or any superior committee, so that if your institution or other person institution, there is a committee and mine there is no committee, you can still get the marks. So you can inform the committee about the issue to take steps to let them resolve the issue. Then what again? Professional advice or legal advice as to what to do. What am I supposed to do with this situation? Because there is a desk even at ICEG for ethical issues. So when you call on them and put your issues across, then they will be able to advise you appropriately. So you can call them for them to advise you on something. Okay. What again? Okay. So all the processes all the meetings that you have with him, document them. This time we met with him to talk about it. He said this and he also said that the next time, so that all the steps that you have taken to resolve the issue, you have it documented. Okay, then what again? And so if you think that before they sack you, you resign and go. Because it may be so much that sometimes those senior people they have a lot of things to do against you. So if you don't take care, maybe that is where he's getting 1 or 2 things and you want to block it, blah 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 blah. Some people are not killing somebody.
in this case, the financial director himself is he a member of IC?
Yes.
So that's what I want to ask. When you seek professional advice,
Than reporting.
and it's more report. So seeking the advice and then are they seeking steps?
The seeking advice is you getting the advice from the ICE. But if through the advice, they advise you that if the person is a member, go and report him. That is also another one. Yes, it's a separate thing. But that is an advice. Go and report him. If you choose not to report him, that is, you are okay. But if maybe they come around to do the review and they see that there has been a certain issue and they want to deal with the person, it's like you did not know that. They have found it themselves. Then the training, won't there be any training or something? Not for him per se, but because if you yourself, you know where the goods are, so you could also be helping. You know the movement of all the stock. Maybe he is trying to relate to a different part, there may be that the stocks are already there. Just that you don't know. But in the case, there has been consistent. There has been consistent adjustments like that.
So why as a director, your immediate manager, I don't want you to know why everyone's additional stores?
So if possible, the finance director would organize training and education for all the staff to know how to resolve even ethical issues. How to even resolve ethical issues. So that anytime that issue comes, it's not like intimidation, or there can be the seeking of advice to or informing the directors as such. Maybe there is a way to deal with the issue, which the financial manager may not be aware. So if you are giving proper detail of the processes that you are also supposed to go to, then you'll be able to go through and resolve the issue. The never can then you can be found. But I guess this you are able to get 8 or 9 out of it. So I'm not going to believe now. Okay. Then awesome. Is there any big part of that question? That is standard, right? So please, for the question, ethics may be 5, and the other one may also be 5. So you want to see a 5 minute, at least we have to get it. You want to see a framework and how but I guess it's the normal accounting terms that's supposed to be there. So you have to go and read it. Yeah. Let's look at the standard overview, and I guess we have done majority of the standards. So please get to know what it entails, right? Even if you are not going to go into details, just know how it is or what is it about. If it is IAS 1, the presentation, and let's start with 2, which is the inventory. In the inventory, the most important there is the valuation. What is the measurement that you are supposed to use? And we are saying that you are supposed to use the lower of cost or net realizable value, the lower. So within your final account, there can be inventory and additional information will be there, down there. The inventory, we have raw materials, work in progress, we have finished goods, there can even be supplies. Whichever inventory is there, it's not your problem. Your problem is to find out the lower of cost or net realizable value. So supplies can be there. Then the cost will be given. The replacement price will be given. The net realizable value will be given. You will be stating it. So the only issue is to get the lower of cost or the net realizable value. So if you take any of them, raw material, which one of them lower of the two? I hope it's okay. So pick the lower of the two, and that one will be the value of the raw material. To pick the second one, the lower of the two will be the value. So it will be that the cost here in the raw material will be lower, then the net realizable will be higher. The other one here will be higher, this one will be lower. So you don't have to panic. Just the two, compare the two on each line and pick the lower. As simple as that. And the value finally will be the total that you have picked. That will be the image. Then you go and adjust the one in the trial balance or the draft financial statement. You get it? So if this one is, let's say, 2,000, there are a lot of inventory. So the person will tell you that the inventory, which is, let's say, 12,000, includes these ones, which is, let's say, 4,000, which has been valued at 4,000. So the breakdown will be given to you. Then when you check the breakdown, it's supposed to be 2,000, not 4,000. You get it? So what do you have to do? That means that you take the 4,000 and put the 2,000 there, or you find out the difference and take it out, whichever. So I can subtract 2,000 here, or subtract the 4,000 and add the 2,000. Do you get it? It has been included already as 4,000 in here, but it's supposed to be 2,000. If that is the case, the difference between the two is that this figure has been overstated by the difference, which is 2,000. So I'll just have to, and I'm changing it, right now, because that's how I do 2,000. So it has been included here as 4,000, but the actual figure is supposed to be 3,000. So it has been inflated here. So what am I supposed to do? I will just take the 1,000 off. I hope it's okay. Or I'll take the 4,000 and add a waste of time. You take the 4,000 and add on there. Because the difference is so I don't choose subtract the 1,000. Maybe it is also understated as such. Maybe if this one is 6,500. That means that this one was understated. That means that you have to add more to it. So you are adding 2,500, the difference. So don't panic about the standard. It's just going to be the same rhythm that you know. So if you don't know what is there, you say the person will require, according to IS to inventory, what will be the financial statement? Then you just write. Inventory is supposed to be accounted for the financial statement at the lower of cost or net realizable. What will yes, that they can do it. Will be. Now we're to now go ahead. I hope it's okay. Alright. Then when we come to 12, we should do 10. Let's do 12. 12 and 10 and 30. 7 will be done together. So this is income tax. Income tax. Income tax might always be in the question. So the income tax, what you are saying is that in the income statement, the income tax that you are supposed to state there is the current tax provision. The current tax provision. And previously, if there has been any under-tax provision, or there has been overtax provision. So under tax provision is a situation where last year we provided like this one, but the tax officers says that what we are supposed to pay supposed to be more. So our provision, the provision was 100, and the tax officers say that that is GRE. GRE is saying that no, you have to pay 120. That means that what we provided was less than what we paid. So it is under provision. So you have to add more 20. But we have come to the current year, so we wouldn't go back and add. So that is what we are supposed to add here. So if this year we are providing 1,500, and previously we are provided, we add under provision of 220. Sorry, 20. I hope it's okay. If we also provided 100, but we are saying that we are supposed to pay 70, it means that what we estimated was more. So we have provided more in the financial statement. Then what are we supposed to do? It means that when you come here, we are supposed to subtract the 30 out of it, the current one. As simple as that. Then the deferred tax. The deferred tax. What then is the deferred tax? If there's any difference between the carrying amount and the tax base, so we, the accountants, are using the carrying amount. The standard is telling us to do our accounting according to our standard. And the tax people are also doing their tax calculation according to the tax law. There may be differences in the value that we have. The carrying amount may be more than the other figure. So at times, when you have, let's say, motor vehicle, and the cost is 100. At the beginning, the cost will be 100 for each of us. Then we will do the depreciation. They will also do the capital allowance. So if the depreciation is 10% on the cost, then the 10% will be 100. Right? So we have the carrying amount of 900. For them, the capital allowance of the schedule in the tax base is going to be about 20 or 30%. So they will calculate their capital allowance on the 30% on the cost, not your 10%. So if it is 30%, that means that they are getting 300. And the closing balance is going to be 700. So it means that there is a difference between the carrying amount. So if the carrying amount here in the accounting is more than the tax people's value, then we have the temporal difference. Get it? So the temporal difference is that difference between them. And the difference will be how much? 200. And that temporal difference, we just multiply with the current tax base or tax rate. The tax rate. So if the current tax rate is, let's say, 30%, that means that we are multiplying the 200 by the 30% to get the deferred tax. So let's multiply it like that. It is going to be how much? 60. 30% we multiply 60. So that will be the deferred tax. Then you come and add the deferred tax of 60. I hope it's simple. So in the present, they will be giving you the temporal difference. They will always give you the temporal difference. The investor of the brain, we don't see how you will now temporal difference. But if it is a standard coming as tax, they will give you the figures. Then you do the calculations. But I don't think we are giving you. Just get the table. Carry amount, tax base, temporal difference, tax rate. You apply and follow him back. In the same vein, maybe here the asset will be revalued. We do revaluation. Tax people, they don't do any revaluation here. So we will do the revaluation, and revaluation surplus will be added. Let's say that the carrying amount was 900, but we have revalued it to 120, 1,200. If it is 1,200, it means that the revaluation surplus is how much? 300. So now the carrying amount is going to be 1,200, but for them it is still 700. So this revaluation surplus will go to other comprehensive income. You know that. And there's still going to be a temporary difference of how much? 500, right?
Yeah.
Then you multiply with the tax percentage, 30%. You get 150. So it means that if there are two situations like that, 50, the 60 plus the 150, so that you get the 210 to be put here. Is that okay? Sometimes, sorry, that is what I'm coming to explain. Sometimes, since this one relates to other comprehensive income, that means that we are not adding it to the current tax in the income statement. So some of the questions will tell you that the temporary, what do you call it, deferred tax of 310, 150 is as a result of the revaluation support. If that is the case, that means that this one will not be here. So all that it will be here is the 60. But the 150 will go to other comprehensive section. When you have the revaluation gain of how much did we have? 300. Right? Then we less tax of 150. So that temporary difference will be here. I hope it's okay. So the tax here is a temporary difference as a result of the revaluation. Because the revaluation surplus is other comprehensive income, a tax associated with it supposed to be in other comprehensive income. It will not be added here. I'm saying that if in the sentence it tells you that the total deferred tax is less than 210, but 150 relates to the revaluation of so and so, that means that 150 that relates to the revaluation will not be in the income statement, but it will go to other comprehensive income. If the question is silent, that means that all relates to what you call it, the income statement. But if it is as a result of revaluation, if you did it and it's as a result of revaluation, you have to bring it in. Like we did it now. But if they have calculated it for you, and it is telling you a portion for the revaluation and a portion, other portion, that means that you have to deduct the portion that goes to revaluation from the total deferred tax and separate it. I hope it's okay. A portion may be as a result of revaluation. Check in the question if it sees that a portion is as a result of revaluation. However, if you are doing it, then that portion that is as a result of revaluation, you have to take it to other comprehensive income, not in the income statement. You have to separate it. Okay. Any question?
Changes in the effects.
Okay. So this is where we all go on to do the, and the deferred tax is also a provision, right? A provision. So far as it's a provision, if 60 is calculated now like here, this is for the first year of year 2021. And if you go to 2022, we are going to calculate depreciation and calculate the tax base, right? The capital outlay. And also calculate the tax rate and the difference. Here, we are getting, let's say, 80 as deferred tax. That is subsequent year. The first year was 60, we are putting there. Then the subsequent year, we are getting 80. It means that the provision of 60 has increased. If that is the case, then the subsequent year current tax, if it is, let's say 200 or 2,000, there is no overtax or undertax provision, but there is a deferred tax because of this. So since there has been an increase in provision, that means that you add only what? 20, the change between the two. So at times the question will give you the previous deferred tax and give you temporary difference and the rate. So you calculate the closing one, which is this one, and compare it with this one. And know that there has been an increase. If there has been an increase, the deferred tax will be added. Supposing that it's lower, if here is 50, it means that there has been a decrease, and that decrease is supposed to be subtracted here. I hope it's okay. But you and I know that the deferred tax is supposed to go to, this is in the income statement. When you go to the statement of financial position, the deferred tax is in the non-current liability. So you write deferred tax, and the closing one is what you have to pay. The closing one. So if it is 80, you go and write the 80, not the difference. If it is a final 50, you go and write the 50, not the difference. Okay. So the statement of financial position will take the last provision, not the change. Okay. Any question? Any question? All right. Then we can talk about 16, which will still be in the exams. So PP. So with the PP, we are saying that it's supposed to be initial measurement and it's supposed to be at cost. And the cost, the definition of the cost is supposed to be called the cash and cash equivalent that you use to acquire the asset and all the attributable costs or the fair value of the assets. And at times there is decommissioning cost. Decommissioning cost that's supposed to be added. So if there's any installation that you have to do that there is decommissioning cost in the future, then that decommissioning cost is supposed to be at present value. At present value. So if you mount a tower for 10 years, 20 years, and you have to remove it, you have to estimate the cost in the next 20 years that you are going to remove it. So if the 20-year cost is, let's say, 15,000 in 20 years time, 20 years time, that means that this is a future value there, and you have to find the present value. As at that time, the cost of capital will be given to you. So if the cost of capital is, let's say, 15%, that means that you have to discount it to the present value. So we multiply this 1 by 1 over 1.15, reach the power the number of years. So if it is 50 years, 10 years, etc. So that you get the present value and add it to the other cost. So that is the only thing that is there, which is a little bit different under the cost. Under the cost. The decommission is supposed to be part. All that attributable cost is normal. Then we are saying that if it is also construction or whatever, the borrowing cost is supposed to be part. The borrowing cost that you have applied is supposed to be part. Okay. Then the subsequent measurement can be at cost or rate valuation. If it is at cost, we are still going to get the cost minus accumulated depreciation minus accumulated impairment. That means that you are using cost model as a subsequent measurement. If it is at rate valuation, it means that at a certain point in time, you have to rate value the asset. Revalue the asset. And if you revalue the asset, you are still supposed to depreciate it. When the asset is using the revaluation model, you are still supposed to depreciate it. Okay. That is for the two. Notwithstanding, if there is any revaluation gain, supposed to go to OCI. If there is any revaluation loss, it's supposed to go to profit or loss account. However, if there has been previous a loss or gain, depending. So if the previous there's a loss and a gain comes in, and a gain comes in, so a loss and a gain. The loss was already in the profit and loss account. So if there is a gain, you have to reverse the loss. You have to reverse the loss. However, you have to reverse the only remaining loss. So that is the loss sitting in there would have depreciated. The loss would have depreciated. So if it has taken about 4 years before the gain came, it means that that loss in there has depreciated over the period. So you calculate the depreciation on that loss by revaluation loss divided by the remaining useful life of the assets. So the revaluation loss that you have here, how many remaining useful life is left for the assets to be consumed? Then you divide it to know the number of the depreciation of the loss. Then if it has taken 4 years, you multiply by 4. If it has taken 5 years, you multiply by 5 to know the amount that has depreciated. Then you subtract it from the loss itself. The revaluation loss minus that ratio. The revaluation loss divided by the useful life. Because that's the loss sitting in the P&L is over years. That means that the depreciation has taken place. Now, what has a issue? When the issue apart from the middle. If you reverse here, then the remaining, after you have reversed this, then the remaining gain can go to OCI. There was a previous loss, and again, you reverse the loss. If there is still remaining amount of gain, you send it to OCI. You can only reverse the loss up to the loss remaining, not more than that. So if there has been, let's say, 2,000 loss, and the 2,000 has been sitting in the books, and the useful life is, let's say, 5 years. 5 years. The useful life is 5 years. And there is a gain of, let's say, 1,500 in the third year. In the third year. If that is the case, this loss is supposed to be depreciated. So the 2,000 minus the useful life 5 years. How much is it going to be? 100, right? Then 400. Okay. 400. So you subtract the 400 from the 2,000, it will be left with 1,600, right? That means that you can reverse up to the 1,600. I mean, this way. And for 1,800. No, this one, right? It's only here for a year. It has been there for 3 years. It has been there for 3 years. So 3 by that will be 1,200. So I can still make that. And then depreciate 1,200. So you cannot reverse all the 2,000. You can reverse the 2,000 minus 1,200. So the one sitting in there is only 800. Yes. So the remaining loss will only be 800. So you can reverse only 800. Get it? Then it will be left with what? 700. It's supposed to go to OCI. Syria.
Yeah, what I want to understand is the number of years.
Yes.
Like the asset when you what like let's say it's supposed to last for 3 years. We have used up to 3 years, and the third year we had a loss. Now we have 7 remaining useful lives. So let's assume that the following year we had a gain, which reduces the number of useful lives to 6. So in that case, in that case, 6 then we are going to use to buy the.
So the following year you have a gain.
Yes.
That means that the loss has been sitting in the book for only 1 year.
Yes,
For only 1 year. So that loss, if it is this, that means that you divide by the remaining useful life. That was 7 years remaining.
That was at the time that
Yes.
the loss was incurred.
Yes. That was 7 years remaining. So 7 years will be divided and times 1. It's really 1 year that we're talking about. Right? So you subtract that one from the loss. So the 2,000 again minus that depreciable loss. You get it? So you subtract and the remaining will be the one that you can reverse. So let's say that it will be maybe 1,800. That will be the amount that you can reverse. So if the gain is more than 1,800, it means that you can reverse 2,000. Even though the main loss was 2,000, it has left with 1,800 in the books. So if you have a gain of 3,000, you cannot go and reverse the 2,000. You have to reverse only the 1,800. Then the remaining, which is 1,200, will go to what? OCI. Yeah, after the reversal, there will be more gain there. So here with this scenario, we can say that the loss was 2,000. The remaining useful life was 5 years, right? 5 years. So we depreciate the loss over the 5 years period. And the gain happened in the 3rd year, after the 3rd year ends. After the 3rd year ends. Because it can be before or after, whichever. So after the 3rd year ends, it means that the loss has been sitting in the books for the last 3 years. If that is the case, depreciate the loss. So 2,000 divided by 5 times 3 will give you the loss that has expired. And if that is the case, that is 1,200. That has expired. But the total loss is 2,000. So it means that the remaining loss in there is 2,000 minus 1,200. And it will be what? 800. Sitting as a loss in the P&L. But here is that you have a gain of 1,500. So you can reverse the remaining, which is 800. So in the income statement, you have revaluation, reverse of 800. And other comprehensive income, you have revaluation gain of 700. So you have to separate the 1,500 into 2. One will reverse the remaining loss, and the other will be taken to the gains. Stop. So sometimes the company will also transfer some of the revaluation gain. Like how to reverse before you transfer. So the remaining, if they say that you transfer a portion of the gains to retain earning, you just find out the difference. And we said that revaluation, depreciation before revaluation, and depreciation after revaluation. That is how much it change you can transfer. So if depreciation before the revaluation was 2,000, and after revaluation because the figure was the figure may be 2,700. 2,700. The change is what you can transfer, which is 700. Or you can find the revaluation surplus. Revaluation surplus and divide by the remaining useful life. You get the same answer. So if it is the total revaluation surplus and the remaining useful life is 2, you divide by 2. And that one will be the 750 that you have to transfer. But since I want to transfer, we have an 700 into 700 and you cannot get more than that. But I think the person is coming to give you a larger figure for you to be able to transfer. As for the increase, it will go to the other comprehensive income. And if there is also increase and a reduction, that one is direct. However, there is a loss and a gain. That is where the problem is. That is where the problem is. Apart from that, PPE doesn't have so much. So you have to do the income statement and other comprehensive income to show where you put it. So please, with the income statement, you will be depreciation. The figure is supposed to come. If it is saying that show in the financial statement, then the depreciation for the year for that period must also come. That one I did not do that, but you are supposed to bring the depreciation for the year. Any question with that? Then, at times, as we said, we may be changing from that to 40 or from that to 2. So, it could be that PP will change to investment property. The changes is what comes in the exams. Normally, the investment property is self-question, they don't come. But we have said that the property will be valued based on the intention of management, whether you want to use it as an administrative or to help us in the production, or you want to get the rentals or the capital appreciation, or you are using it as inventory, whichever. So the same property can be used in various ways. So if you are changing from PPE to investment property, the standard is saying that just get your carrying amount as at that time, no matter which of the method that you're using. So PPE, you are supposed to get the carrying amount at the time of change. Then, what will be the fair value of the investment property as at that time? The investment property will be valued at fair value. It will be valued at fair value. And fair value is also another standard, IFRS 13. That we said that there is a hierarchy. And the first one is quoted price. There is quoted price again, but similar commodities. Then the third one is what? The present value of future cash flow. Yes. The total price of the market value. But here the total price or market value of similar commodities. Then the present value. That is a fair value. And we are saying that it's supposed to come down. So if the first one is not there, you can pick the second one. If the second one is not there, you can pick the last one. However, if the first one and the second one is there, you have to pick the first one. So the higher that it goes, you have a favorable test. Okay. So fair value here, you check the difference. And if there is a difference in them, we are saying that you have to treat it as what? PPE. So if
the fair value of the investment.
yes. Come on, to investment property fair value. Yeah, but, so if the carrying amount is, let's say, 3,500, and the fair value of the investment property at the time of change is, say, 5,000, then the difference is supposed to be treated as PP, a change in PP revaluation, right? So it means that it has been revalued upward by how much? That I'm taking 4,000, so that here will be 1,500, this is going to 2,525. So this one will go to where? Goes here. If it is a reduction, 2,000, the fair value is no more 4,000 but 2,000. That means that there is a loss of 500. So this one is a gain. And if it is a loss, PP, where does it go? Profit or loss? Then I'm still using the carry amount fair value. I'm changing from PP to investment property. At the time of change, if the carry amount was more than the fair value, that means that there has been a reduction. And that reduction is 500. And it's supposed to be treated as PP. And when you are using PP, a reduction in value will go to where? Profit or loss. Increase in value goes here. Notwithstanding, if there has been previous blah 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 blah, it's still there. That one is still there, that PVR is still there. Then, subsequently, if we continue, you have to also find another fair value. Subsequent is still on fair value. So, under the IAS 40, investment property. Now it's investment property, right? Then subsequently, we have to also find another fair value. And if the fair value is less than 3,000, that means that there has been an increase in the initial fair value and the subsequent fair value. And that change, which is 1,000, go to where? Here. Because it's now investment property, no more people. Any change in investment property will go to here. Okay. Even if it is a loss, it is still here. If it is a gain, it's still here. But this is a gain to go to here. So we change the intention again. So change the intention again. So if you still want to change from that to 2, IS2, notwithstanding, after you have changed it, there is no depreciation. When it is investment property, no depreciation. Investment property, no depreciation. The back of just distraction. So far as investment property, it could be that it will start from that top there that is the useful life is 10 years, and in the middle we change it to investment property. It changes now for equity depreciation. So far as it has changed, no depreciation. The other useful life will back at 8 years. So when the fair value I mean depreciated on I depreciate. Fair value, money is. Okay. If you want to change it to inventory, you have used it, you want to sell it or something like that. You are using it as an inventory. And here, they are saying that you have to still get a fair value. You have to still get a fair value. So this fair value, you compare with another fair value. If the fair value is, let's say, 2, but you can put it 2,000. If it is 2,005, if it is 2,005, that means that there has been a reduction. from investment property at the time of changing it to inventory, there has been a reduction of 500 negative, right? 500 negative. And it's supposed to be treated as investment property. So it is going to E&I. So within the same year, you need to have changed the way to million. Then the farm, the only program is to get where is it going and farm. Right? To be other comprehensive income, that way you have. So when we say what will be the effect on the statement, income statement extract, then you come and make. Then you just do that. Okay, so in the inventory, it may be that you sell it. You sell it. And as you sell it, the change will still go to profit or loss. So when we sell it, maybe this one we are selling it at 4,000. We are selling it at 4,000. So we ask if we give inventory, we are selling it at 4,000. Then the change will still be in the inventory, but sorry, in the profit or loss. But still on the revenue. So this one is going to be the revenue as such. So the double entry, we take it to the economy. We debit the goods is already in the cost of sales as such. How much? 2,500. Then the profits. Okay, we sold it, so it's going to go out of the sales. We have the cost of sales and the revenue. So the revenue will take the 4,000 as in the credit. So if it is for cash or if it is on credit, depending on where it is going, debit the if it is cash or bank or the debtor or the receiver. How does he use receiver? But taking it from here will also mean that we are going to take the cost of sales out, and the credit side will be to send it to the 2,500 added to the revenue. So the credit side will take it, and the cost of sales will also take the 2,500. The revenue still on 4,000. The profit element will also take the difference, which is 1,500. So this one is going to give it 2, so that it will be 4 and the other 4 packets. So if it is stock, inventory is 2,500, right? Then the cost of sales will come and pick it, cost of sales. We'll pick it at 2,500. So here is going to be at the credit side, you are removing it, and it goes to the cost of sales. And if the revenue comes in, the revenue is going to be at the credit, which is 4,000. And the change will also be 2,500. Sorry, 1,500 plus the revenue. But the contract, the answer, the sales and the change will go to P&L. The change is 1,500. It will go to P&L. No. Until this matter, so that is why we are moving from PP to investment property to inventory to sales. That's the account. We have the asset. At times, the same property will also be held for sale. So it could be PP and we are taking it to held for sale. So this is 16. This is IFRS 5. We are moving it from here to that side. If it is 16, it is a non-current asset. If it comes here, it's going to be current asset. So you have to move it from the non-current asset side to current asset. The same property, the intention has changed. And we are saying that there is a criteria for that. If it meets that criteria, it means that it's going to be treated as held for sale. So, is it in saleable condition? Is the asset in saleable condition? Is it available to be sold? Are we locating potential buyers? It is expected to be sold in 12 months. If it meets that criteria, it means that the asset can be classified as held for sale. So within the available, it's supposed to be in that condition that we are selling. The price is supposed to also be there, not exorbitant price as such. If that is the case, the asset is held for sale. And when you also classify the asset as held for sale, no depreciation. You don't depreciate the asset when it is classified as held for sale. So no depreciation for assets that is classified as held for sale. They are not sure. So here too is going to be fair value less cost to sell. Expected to be sold in 12 months. So the measurement is supposed to be fair value less cost to sell. Fair value less cost to sell under the held for sale. But the standard is held for sale and discontinued operation. I have seen a question that they said, what is a discontinued operation? A discontinued operation. And it is 2 marks. You need 2 marks to even pass. 52. So discontinued operation, you have to know discontinued operation. So you are saying that discontinued operation is all the asset that is held for sale that represents a major component in the business. A major component in the business. That is a discontinued operation. Or if an asset, a subsidiary is acquired for with the intention to resell, it is also a discontinued operation. If there is any foreign subsidiary that we have the intention to resell, it's a discontinued operation. Because sometimes you will be asking small persons and it's like, yes, I'm also that. So any change in it is also going to be treated in the income statement as such. If the most important thing is that the reclassification, if it is held for sale, it will move from a non-current asset to current asset. And the value is supposed to be on fair value less cost to sell. And we are saying that if there is the carrying amount is more than the fair value less cost to sell. So if this one is 2,000 and this one is 3,800, the difference is supposed to be treated as impairment. So the 2,200 is supposed to be treated as impairment. 200 is supposed to be treated as impairment. Okay. So we are picking the lower. So the value is the lower of cost. The lower of cost. That is the carrying amount. That is the carrying amount. So it was PP. It has a carrying amount. And now we are going to treat it as held for sale. Then what value are we supposed to use? We take the lower of the carrying amount or the fair value less cost to sell. If the fair value less cost to sell is lower than the carrying amount like it is here, that means that the difference is impairment loss. It's impairment loss. We are saying that we pick the lower, so there cannot be impairment there. If the lower is the carrying amount, you treat the lower as what's supposed to be the value for the held for sale. I hope it's okay. Then subsequently, we are still going to measure it as the subsequent measurement is still fair value less cost to sell. And if there is a difference between the initial and the subsequent one, the initial and the subsequent one. So if the initial which is 1,800 and the subsequent is 1,500, that means that there is a further impairment of land. So at a point, 30th June, and they change. 31st December, you have to get a new value. And if the value goes down again, further impairment. If it increases, it will be reversal of impairment. But you cannot reverse more than this one. You cannot reverse more than this because the carrying amount. So here, let's assume that the subsequent measurement give us 2,100. So you are comparing this and that. That means that there has been increase in value of how much? 300, right? That means that there's supposed to be a reversal of impairment. That reversal is supposed to only take up to here, up to 2,000, not more than 2,000. So the 2,000 one cannot be sitting in the book. You can only reverse this amount. So you can only reverse 200 out of it. The one must be for one. You are supposed not to use the 2,100. You are supposed to use only 2,000 because you cannot reverse more than the earlier carrying amount. If the carrying amount earlier was this, and the fair value was lower, and you went further and the fair value has increased, no, you cannot reverse more than the initial carrying amount. You're supposed to reverse only 200. Yes, only the impairment. You cannot reverse more than the impairment. So now the carrying amount, or since it is not fair value, less cost to sell, supposed to be 2,000, not 2,100. Because the one in the book is what? Now the one in the book will be 1,800. So you can only add 200 to it. So you don't go and add 300 to it to make it 2,001. No. The standard doesn't allow that. We even do that. We even need to imagine our method. Now that you are going to write 2,001, so you cannot write more than 2,000. It's even control 2,001 here. We are. The idea one is different. The one is here what happened. We are in health for sale. We are not in PP. We are in health for sale. And if you are in health for sale, the value, the substance is supposed to be fair value less cost to sell. But if there has been previous impairment loss, because you are supposed to use the lower initial, you are supposed to use the lower of the carrying amount or fair value less cost to sell, right? I'm not taking the lower. So we pick the lower, which was fair value less cost to sell. But the carrying amount was 2,000. So in the book, so as the carrying amount is 2,000. If there is a reversal, it's supposed to be up to the 2,000. If I say 2,001, then there will be a amount. It means that you want to window dress your account, creative accounting, no. So it's supposed to be stated up to here. You don't go beyond the carry amount. But if it is the PP old one, you can go. Right? But here it is different. Any question? Not be here. Not be here. How about 5 minutes? We have been So get the standards. What again? Please, you have to get all the standards overview of it. As for the evening, I haven't done the 33, which is the earning per share. The earning per share, you are supposed to be able to calculate the diluted earning per share, right? So you test the dilution before you calculate. And you are saying that the dilution is where, when you convert the convertible bonds or notes, it will lead to dilution. How do you then test it? You get the interest. And the interest is supposed to be turned to earning. How do we turn the interest to earning? The interest multiplied by 1 minus t. It will turn to earning. So if it is 5% loan note of 10,000, that means that you are working 5% on the 10,000, right? And that would be how much? 5% on the 10,000, 5 times 350. 50. I forgot to do this. 5%. Okay. So that would be 1,000. 10,000. Okay. So the 10,000. Okay. So that interest will be 500, and the tax rate will be given. If it is 30%, it means that multiply by 0.7, right? 1. This is a whole number, not add. 1 minus 2. So 1 minus the tax, which is 0.3, to give 0.7. So it's going to be 350. So if it were finance cost, it is 500. But as it tends to earning, it is 350. So you check the earning per share. That means that the 350 divided by the number of shares, which is 10,000. The value will be given to you. The number of shares to get the earning per share. So that is the basic earning per share. And if it is less than the earning per share within the company, that means that there is going to be a dilution. If it is more than that, there is anti-dilution. You don't calculate the dilution at all. Notwithstanding, you have to also know how to get the bonus issue, the bonus fraction, the right fraction. That is the most important thing. So if it says that you have to, if you have 20, it will give you 1. Or whichever. If you have 5, it will give you 1 for free. Then the bonus fraction is just going to be, you add the 2, and it is going to be 6 over the original figure, the one who has 5. The bonus fraction is going to be 6 over 5. Then if it is right issue, you are saying that the current market price over the theoretical right price, X right price. So it's very important that you know how to get those things. And that one will also be stated in that same way. If you have existing 5 shares, it will give you one as a right issue. That means that buying the one will reduce the value of the share, right? So the original 5 will have cost 3 cedis per share. Then the additional one will have cost 2.5. Get it? Right issue. Those who have the 5 will be given additional one, or 2 or 3 or whatever. So the 5 existing will be given 1. Then what is the price of the original 5, the market price of the 5? That is 3. Since you are the existing owner, we will reduce the price for you. That is the right issue. Then we give it to you at 2.5. So in order to get the theoretical egg price, you have to multiply the 2. So here is going to be 15, and here is going to be 2.5. So the total is going to be 17.5. And here is going to be 6. So to get this, we just have to 17.5 divided by 6. That is the theoretical X right price. Then the current price, as you have said, is 3. This is the current price. So we have to find the decimal here and just divide it together. Right fraction. So in order to get a weighted average, that means that the shares times the time times the right fraction times the bonus fraction, depending on whether the two are in the same person. So there is that table, which will be the year or the timing of the issue, then the number of shares in issue, then the time, then the right fraction, the bonus fraction, then the amount, another number of shares will be here. So if the initial share within the same year, maybe on the 3rd of March or on the 1st of March, there was an issue. So at the beginning, 1st January, we were having 10,000 shares. And on the 1st of March, we issued the right issues. Then we also issue 1st July, the right issue also. So here is the bonus issue, here is the right issue. If that is the case, then anytime that bonus and the right issue comes, you don't use a fraction. You don't use the H fraction. Okay, so whichever comes first, let's assume that it's the same figure. So on the bonus issue, 1 for 5. 1 for 5. So we have the initial one, and it's going to be there for from this time to this time. That is 3 months. So 3, yes. January, February, and the March that is 2 months. So 2 over 12. Then the right fraction. How much did you get? No, you divide 17.5 divided by 6 first. I don't know those. Okay, so it's going to be 3 over 2.92. So that will be the right fraction. Then the bonus fraction will also come 6 over 5. Then when you multiply, you get the weighted average number of shares. So this is the weighted average number of shares. Then on the 1st of March, there was a bonus issue. And the bonus issue, it was 1 for 5. 1 for 5. So the additional shares that is going to be there, it means that 1 for 5 means that if you have 1, so 1 is equal to the 10,000 shares or 1,000. If you have 1, if you have 5, you are going to give you 1. So you just divide it by the 5 and multiply by the 1 to get the additional 3 shares. So 5 is to 1. If you have 5, you're giving 1. So if the 5 is equal to the existing, which is a 10,000, what will be the 1? So it's going to be 1 over the 5 times the 10,000. I hope it's okay. How much will it be? So 2,000. So 2,000 be added to this. The 2,000 is the bonus issue, and it will add up to be 12,000. I hope it's okay. Then that one will last for first March, April, May, June, July. It's first. So how many months? So 4 over 12. Since it's the bonus issue, this bonus fraction will not come. Then you still have to bring your right issue to 2.92. When you multiply, you get a weighted average. Then the right issue also comes in. The system is still 5 is to 1. That means that 1 over 5 times the resistance, which is 12. So we are getting how much? I have fraction. 2,400. So the 2,400 will be added, and it will be 14,400 shares now. We are saying that the existing shares, anyone who goes 5 will give you additional 1. So you just have to divide the existing 1 by 5 and add it to it back. It can also be that who has 5 will be given 2. So you divide by 5 and multiply by 2. Who has 5 will be given 3. You divide by 5 and multiply by 3. Is that okay? So when you get it, it means that there was existing shares already. So you add the new issue to it. And the new issue was 2,400. Added to the 12 will be 14,400. So as at from first to it will be 6 months, right? 6 over 12. As at that time, these ones were gone. Then you just multiply to get the weighted average. So when you sum it up, you will get the total weighted average. The earning will be given to you. You just divide the total. I have the weighted average now open and earning. Apart from that, here you are earning. Okay. Again, is revenue so there is lease, there is 21, there is impairment loss, there is blue. The assets will be impaired when the recoverable amount is lower than the carrying amount. And it will be cash generating unit. We have to know how to pro rata, how to share the impairment loss. That one we have done it. The condition for impairment, physical, what do you call it? There are 2 different conditions, the physical ones and the, what do you call it? The economic ones and those kind of things. You have to know how to test the conditions that's supposed to be available. To name another also. But you need not just get the overview. And I guess it will be okay. Any question? I really have a point now. Please, any question? So my advice is that please go through it small. Get acquainted with the whole of the standards. And and you can do even more than the 15 marks that we're talking about. In the final accounts, we have the question, I will send the solution. So you just pick any of them, the items that you don't understand. You let us know. And we do a standby. So this year they are not the management. That's a management. The management chain. Time better at 12. One I had a